This spreadsheet is good for like a quick and dirty comparison. There are a couple of things that it does not address, one of which is the effect on retirement planning. So let's take a SEP IRA, for example. If you have a one owner business, no employees, SEP IRA is a great tool because they can contribute up to, I think it's $58,000 in 2022. SEP contributions are up to 25% of the net income from the business if it's a Schedule C, or $58,000, whichever is lower. For an S corporation, that contribution is limited to 25% of the W-2 wages of the S Corp owner. So unless the S Corp owner is paying themselves wages of $200 and some odd $1,000, they're never going to get to that $58,000 max contribution. And so that can be a big deal, right? That has some tax implications, but also long-term retirement planning implications. And this spreadsheet does not address that. So that's just one little caveat I want to mention. Because you have to keep that in mind if you're using this to do analysis for your clients who also have financial advisors or are looking for retirement planning advice. So we're just going to start at the top, and we're going to say that this is a business that has gross sales of $239,581. I think that was just a number I made up when I was playing with the spreadsheet. So in this particular spreadsheet, you only need to fill in the cells that are yellow. Everything else is formula driven. So we pick this gross sales number. It's going to be the same whether the business is a Schedule C or an S Corp, right? The gross sales don't change because of the entity type. And then we recorded business expenses of $75,000. That is before owner's payroll. So we know with a Schedule C, there is no owner's payroll, but with an S Corp, there would be. So for this part, those are going to be the same as well, because we're not talking about the W-2 income from the owner yet. All right, so far everything's the same. Now in the S Corp column, we're going to have some new expenses that were not incurred when the business was a Schedule C, right? We're going to have $60K for payroll for the owner, and this is a number I made up. You know, you'll do your own reasonable comp evaluation with your client and plug in whatever makes sense. Whatever the payroll processing costs are. And if you're like me, you roll in payroll processing to the tax prep and the bookkeeping monthly fee. So for you, that field may be zero. I just plug something in to test the numbers. So we've got $500 a year for payroll processing. We've got the employer portion of payroll taxes, because that is a deduction that the S Corp has that the Schedule C business does not. That's a formula, so you won't touch that. We've got state unemployment and federal unemployment. For this example, I just used 1% just to keep the math simple. You can update that formula right here to be exactly whatever the calculation is for your state, and then the adjustment for federal. I'm not looking for exact dollars here, and so it was easy for me just to put 1%. Then you plug in the total that you're going to charge the client for a year for bookkeeping, because right, and this is in addition to what they're already paying. In this scenario, we don't even have that number filled in for the Schedule C business. So if you're already providing bookkeeping services, you may have to adjust this formula, right? Because the only amount that we're going to have to take into consideration are the costs above and beyond what they're already paying. But in this case, we're going to say this was somebody who was doing their own stuff. I recommended S Corp. I helped them to understand that bookkeeping is very important for an S corporation. And now they want to hire me and have a nice holistic relationship and everybody's happy. And I'm going to charge them $5,200 a year for that. I think that's low, but let's go with it. State corporate minimum tax. Obviously, for you people in California and a couple of other states, that number is going to be much different than what I plugged in here. In Virginia, it's actually only $100 to form your LLC and then $50 a year to maintain it. So it's much cheaper here, but plug in whatever your number is. And now we've got net profit, Schedule C versus S Corp. The numbers are very different, of course, because the S Corp gets to factor in the payroll and all those additional expenses. Then we're going to add in the $60,000 from the W-2 that flows right in from this number. So if you change that number, it's going to change it automatically everywhere there are formulas. So now we have gross income before adjustments. Schedule C filer, as you all know, gets an adjustment for half of the self-employment tax. So that's going to come off. We're also going to take off the QBI deduction. Now, for those of you who don't yet fully understand the difference between QBI for a Schedule C and QBI for an S Corp. The reason we need to factor this in is that the payroll for the owner, since it's a deductible expense for the S Corp, reduces the amount of qualified business income upon which you can calculate the QBI deduction. So in this scenario, they actually lose almost $10,000 of QBI deduction. So yeah, they're going to save self-employment tax, but unless you're over a certain amount of income, what they lose in QBI, which is 20%, could be more than what they save in self-employment tax, which is 15.3%. So it's important to make this evaluation. So now we've got taxable income of 121,000 and change for the Schedule C, compared to the 133,000 for the S corporation. So the taxable income for the S corp person is actually higher. This is an important thing to note if you have taxpayers who are AGI sensitive, right? Like if they've got income-based repayment, I don't know, if they've got anything that's driven by AGI, if they need to have lower AGI, you may want to factor that into this decision. So then I've put a 10% effective federal tax rate and a 5% effective state income tax rate. Yours may be higher, lower. You know, you'll have to use your client's actual information, like take up their prior year return and use whatever their actual effective tax rates were. Then it adds on the self-employment tax for the C Corp, for the Schedule C. To make this comparison effective, it also adds the Social Security and Medicare tax that's paid by the S Corp, because that really is a tax that the S Corp is going to pay. It's just shifted from the Schedule C to the S. So at the end of the day, rough and dirty numbers, the tax liability for the Schedule C would be 43,000 and change. The tax liability for the S Corp would be 27,624 for the S Corp owner. So we're looking at a projected tax savings of almost $16,000 for just year one. So this is a pretty quick spreadsheet. Like I said in the beginning, for those of you who joined a few minutes after we started, it does not take into consideration some things like retirement planning. We talked about the difference in SEP contributions for a Schedule C business owner versus an S Corp owner. So that could be a big one. But if you're trying to bring on a new client, or if you're trying to do some tax planning, you want to sell a tax plan to one of your clients and you're looking for a good return on their investment, right? You're going to charge them for a tax plan. If they hit the sweet spot, if you run the scenario and you can come back and say, okay, well, you're paying me $2,500 for some tax planning tips. Year one, I'm going to save you almost $16,000. You pay me $2,500, I save you $16,000. That can be a way to sell your tax plan. Go ahead, Grace.
Oh, I'm sorry. Is my mic on? I didn't mean that to happen. Sorry.
We could have been listening to some juicy conversations in that car. Okay, so I know I ran through this really quickly. Any questions about the calculator or where the numbers came from or why they add up to how they add up?
No questions, but I will be sending you an email to get my copy.
Okay, yeah, I really like this calculator because it lays it out pretty simply. I think it's easy to understand, and I would not give this to the client, right? Like, I don't want them to see how I arrived at my calculations. That's protected information, right? Like that's my, what is the word? Y'all know what I'm talking about. That's my work product. But I can use this to create a pretty little handout that I can use for them if I'm trying to sell a tax plan. So I love it. Love it, love it, love it.
Hey, Andrea, I did have a question. So when you're doing this for like clients that have like smaller profit margin, let's just say like 30K or 40K, do you tend to see like the smaller their profit is, the less likely it makes sense to be an S Corp? Do you ever see that correlation? Or I guess I'm wondering, what do you tend to see that amount to be?
So we can play with these numbers. One thing I want to point out that I didn't talk about before. So we said total tax savings of $15,702, but remember, to get to that tax savings, they had to incur some additional expense. So if you're looking at total net savings, we've got their tax savings of $15,702. They had new expenses of $6,450, which was the payroll processing, the unemployment tax, the additional money to me for bookkeeping. So the real net savings, the net cash savings is $92.52, which is still great. I mean, if they're paying you $2,500 for a tax plan and their net savings after additional expenses is $92,100, that's still a 400% return on their investment. And when I'm talking to clients about tax plans, that's how I like to phrase it. I don't like to say, this is going to cost you $2,500. I'm going to say something along the lines of, you're going to present, and when you present the plan, you're not going to give them all the details. You're going to be very generic. You're going to say, S election is going to save you this much money. Putting your kids to work in the business is going to save this much money, like whatever. You're not going to get specific about how to implement any of this stuff. And then when you get down to the bottom line, $15,702 tax savings after, or I don't know, like that's a 410% return on your investment with our firm, something like that. It just helps to make the number that they're paying you sound less unreasonable. And frankly, if they think paying you $2,500 to save $16,000 in year one is unreasonable, they're probably not a great potential client for you anyway. Go ahead, Grace.
Oh, I don't know, my speaker keeps coming on. I'm sorry.
That's all right. I'm gonna unless you actually like shout out to me. So Tosin, back to your question. I think you jumped on after we started going through the calculator. For this example, we used a business with gross income of $239,581. Let's drop that down to say $150,000. And we can see the difference in the numbers. Now in $150,000, I don't know, business expenses were set at $75,000 for the larger business. Even if we reduce that to $60,000, that's all expenses, not including the owner's payroll. So everything but the owner's payroll. It includes any other payroll, but not the owner's. And then if the business is only doing $150,000, maybe $50,000 is not reasonable salary for the owner. I don't know. You'll do that analysis. But as you can see, if we drop that down to $150, when we come to the bottom line, we're still at a $9,400 tax savings, but that's much lower than a $15,000, $16,000 tax savings. Part of that is just because they have less tax. But where we see this happening a lot, or where I see most of the mistakes, are businesses that are $100,000 or less. They're still going to enjoy some tax savings, but is it really worth all of the extra work, the compliance, the coordinating with a bookkeeper, all that stuff for a $2,300 a year tax savings? Maybe it is, maybe it isn't. But once you factor in the added costs, the tax savings, the net savings is really a net cost, right? If their tax savings is $2,200 and they had to spend $6,000 extra dollars in bookkeeping and compliance to get there, it's actually costing them $4,000 a year to make the S election. So there's definitely a sweet spot. That's why I like this calculator. Actually, I see this didn't update. That's why I like this calculator, because I can do really quick and dirty numbers. It doesn't take a whole lot of time. And then you can get back to your clients pretty quickly. Did that answer your question?
Oh no, it did, and thank you for that. I think this is good for that too. And you mentioned like the compliance requirements, like just the stuff that comes with having an S corp or even partnerships, like with K1s, paying salaries, payroll, all those different things, or making sure pay a reasonable payroll for S corps. Yep. All that's part of the compliance and the lift. So I think it's good to see the costs, but also keeping in mind some of those other things they need to do now to make sure they stay compliant is good too. So this was helpful for sure. Thank you.
Cool. And so I think I put this out before you joined too. If you want a copy of this spreadsheet, just shoot an email over to me and I'll send it back to you in a link. It's fun to play with too. I mean, I actually used this for my own business when I was deciding whether to do the S election thing. So I don't know. It's just fun. I like to play with the numbers and see the effect. But remember, like I said, there are some things it does not account for, and we could probably build in formulas for that, SEP contributions, things like that. But this is meant to be kind of a quick and dirty analysis. You'll have to do a little deeper digging if your client is like, yes, I paid you for a tax plan. Now that you've been paid, now is when you can really dig into the nitty gritty and come up with a whole entire plan that includes retirement planning and everything else too. This is kind of a teaser. I actually sold a $5,000 tax plan using this spreadsheet. It was a younger guy, plumber. He was a Schedule C and he was doing like $275,000 in his first year of business. And trying to explain to him the benefits of S Corp, his bookkeeper had tried to explain it and couldn't quite get him to get it. So I just took his net income, I took his P&L from QuickBooks and plugged everything in here. And then when I presented to him his tax savings of 27,000 and change for year one, he was like, take my money. That was the easiest tax plan I've ever sold.